CNBC-TV18.
Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. With me is Ekta Batra, and for the markets it's looking quite resilient, right? Considering the kind of handover that we got, considering what the Asian markets are doing as well, we've seen quite a recovery from the lows. Like you can see, we're pretty much at the high point of the day, absolutely flat on the frontline index. So there's been a good recovery that's come through there. The mid-cap index and the Nifty bank have actually broken into the green as well now. So it's looking quite positive for our own markets. What's doing the best today is clearly the Nifty auto pack. So a lot of the larger names will be up for you, the likes of Bajaj Auto, you have M&M, these ones holding very well. Of course, both of the Adani names in the Nifty pack are also holding up with some good gains. And then you are seeing strength in some of the metal counters as well. So we will talk more about the individual stocks, but Ekta, this is quite a good recovery from the lows.
Hi Pavitra, yes, absolutely. You know, we have the mid caps which are fairly resilient, you'd have to say. So we've just about trading flat and consolidating at this point in time. Just want to point out that it is a lot about specific stocks. So a lot of the Adani stocks continue to gain in today's trading session. And we have a couple of other movers as well from the broader markets, which we will be discussing through the show. So for example, Newland Labs, which is up around 3.8%. A lot of the pharma stocks such as Ajanta Pharma, which is buzzing possibly ahead of that board meet taking place on account of a buyback. Natco Pharma, which did approve a buyback, and not to mention that we have a lot of sugar stocks which are buzzing around today as well. So quite an active market, you'd have to say, but we also have a lot of queries now. So we have Sharad Avasthi, who's head of PCG research at SMIFS. And we have Rajat Bose of rajatbose.com joining in this afternoon. Afternoon, Rajat, as well as Sharad. Welcome to the show. Let's get to the first caller that we have. We have Joseph George, who calls in from Navi Mumbai. He has investments in LIC as well as Paytm, two recent listings. Hi, George. Hi, Joseph, rather. Okay, we've lost Joseph on the phone, but nonetheless, he has... Okay, Joseph, are you back with us?
Yeah.
Go ahead. Tell us, LIC as well as Paytm.
Yeah, so basically, I had invested in the IPO initially, and then over the period, I've, bought it in the secondary market, to average it out. But still, the shares are nowhere close to the averages or, seen much movement. So 200 of LIC and 100 shares of Paytm I own, and both of them are on loss for a long time. So any views on this,
How long are you comfortable with holding the shares for?
So, I've been holding it from day one. So, I'm a long-term investor. I don't do much. I do small investments. So I'm happy to hold it. But the way it's progressing, I don't think it's going to happen so soon. But just a view on the company so that it gives me a perspective.
Okay.
Thanks.
All right. Well, that's quite straightforward, Sharad. A perspective on both Paytm as well as LIC. Joseph has bought it, holding on to the losses as of now. He's patient enough to hold it longer, but he wants a fundamental view.
Yeah, so Paytm I think remains a risky bet because we are not sure that we are going to see profits over the next 2-3 years as well. The only positive that you can expect is that a risk on comes back and people start betting on this story mode where maybe the numbers start rollicking in good flavor and good bottom line over the next 3, 4, 5 years. Then maybe the end does make sense. But in terms of the numbers that are available, we do not expect the company to report profits till FY25. So 2 years would be largely into losses only. So it doesn't make sense to stay into it unless and until you have a 5-10 year kind of horizon where a lot of the businesses play out and you get some value unlocking over there. So Paytm, unless and until you have a very long view and you are a high risk appetite investor, it does not make sense to stay on. LIC is a very different ballgame. I think the fair value should be somewhere around 1300 on the stock, even if you consider 1.3, 1.4 times embedded value. And the recent changes that they have done to the shareholder part, that should also help unlock better valuations. The Adani saga has made a bit of problem for LIC, but in the long term, I think that should get sorted out. And it's not a very major part of the total portfolio. So gradually, I think LIC is a very good bet. I'm very bullish on the life insurance space per se. And LIC should prove to be a very good investment over the next 2 to 3 years. But Paytm, I think you could get out as and when you get an opportunity.
All right, LIC could be a good investment and a good pick as well within the life insurance space, but perhaps not so sure on Paytm. Rajat, your thoughts on both of these, on LIC as well as Paytm? Both, like we were saying, recent listings, but he is suffering quite a loss on these names.
See, first I take Paytm. Paytm is very close to its 200-day moving average, which is roughly around 665. If it were to stay above that level and then cross the recent high about say 725 or so, if this range is taken out on the upside, then there is a possibility that Paytm may actually move up. But otherwise, I would say that if it were to fall for any reason below say 580 kind of levels, then I think one should seek an exit. Personally, I would suggest that, see, if you are a long-term investor, why don't you, I mean, I'm not just telling Joseph, I'm telling all the investors, why don't you seek companies whose ROCs are at least 20 or more? In that case, if you are a long-term investor, you will make money. Even if you purchase it at slightly higher valuation, then also you will make money over the long term. But those companies that are not generating ROC, because cost of capital in India is roughly around 12% on an average basis. And given that, at least you should seek 18 to 20 ROC, you would be better off. These companies may not actually produce that ROC anytime soon. And regarding LIC, only thing I would say is that technically it is not showing any sign of revival, but I mean, sporadic rallies will happen because traders play into that. But what I would like to say here is that look for one simple metric. I think that is available on the internet. That is, what is the public shareholding? I mean, what was the percentage in the last quarter? What is the percentage this time? If the public shareholding, that is small retailers are buying more and institutional holding is reducing or maybe flat, only if the public shareholding is going up, in that case you better get out of this stock, at least for now, because it is not going to go up. All stocks that where the retail participation goes up and the institutional participation goes down, they don't move, they languish for a very long period of time. Well, I definitely do agree with Sharad that it has a great potential going forward, but you never know as to where it will seek a bottom and then finally move up, because people are actually, small retailers I have talked to, they are very disgusted at the moment with this stock. With that kind of an apathy, it is not going to go up initially.
Okay, all right, Rajat, that point is taken. Definitely some emphatic views which is coming in on LIC. But let's get to another caller then, or a query. We have Rama Murthy, who writes to us from Chennai, and he holds 50 shares of Eicher Motors at 2484. So that he's sitting on a profit. He is a long-term investor and wants to know whether to hold or sell at current levels. So what would you recommend in this case, Rajat? Sitting on a profit, how does Eicher Motors look to you technically, and how long would you recommend a hold for?
Well, regarding Eicher Motor, I would say that one should continue to hold on, and if 3000 mark is taken out on the downside, then only he should book profits and get out, because that should be the stop loss level for anybody entering now. Otherwise, it is consolidating, and two-wheelers have not yet shown the kind of growth that maybe the CVs and other segments have shown. But chances are that two-wheelers also join in very soon, maybe the next quarter or so. So Eicher Motor and Bajaj Auto both are looking good at current levels, so he should continue to hold on with a stop below 3000.
All right, Eicher and Bajaj both looking good. Sharad, coming to you as well on Eicher and also on Bajaj, I want to ask you, because there were two very interesting reports also that came out today, you know, from JP Morgan as well as from Morgan Stanley on the big EV push that Bajaj is putting in place and the kind of potential that they see. So what are your thoughts on Eicher as well as Bajaj, and do you think these are good ways to play the auto pack?
Yeah, I think to play the two-wheeler pack, both these businesses are very unique. iShare is more on the premium side of it, not the mass market kind of stuff. But the new launches that they've recently done, they are doing very well, and they cater to a new generation. So basically, a younger generation starts booming into the total quantum of demand that iShare can cater to. The VECV business might have some slowdown, but otherwise, the normal raw material prices are also coming down. So that problem is there, not there anymore. The logistic part is also getting covered up very nicely. Gradually, the logistic issues are coming down. So that is also very helpful for iShare. So we think over the next 1 or 2 years, the PAT could have a 17-18% kind of CAGR. So I think you can hold on for a target of somewhere around 38, 20, 25. And for Bajaj Auto, I think there is upside of around 800 to 900 rupees from current prices according to my targets. The valuations are very attractive. And I think the whole two-wheeler space, even Hero MotoCorp, we are very bullish from here on.
Okay, all right. So bullish on the auto space and possibly the push on EVs. That's the view coming in on autos. Harish Kumar now writes to us from Gurugram. He holds 100 shares of Grasim Industries, which he's bought at 1393. And he wants to know whether to hold or sell at current levels. Sharad, over to you on this one.
Yeah, I think recently they have had some issues regarding the VSF business, which saw some raw material pressure from caustic soda and the likes. But we think gradually that should come down and that should help. The big trigger should come from the paints business, which starts later in FY20, later in Q4 FY24. So I think that could be a very big push because the capacity they are putting up is roughly 75% of Asian Paints. Looking at the valuation of holdings, everything, I think our fair value for the holdings after a discount should be around 1200, 1300 bucks and 500 rupees for the business part of it. So I think 1800, 1900 could be a fair value for Grasim. And beyond that, once the paint business starts rolling in, I think there is a high possibility that you could see a very strong re-rating. So I think at these valuations, it is a very safe bet if you look at from my point of view. And I think you can continue to hold initially for targets of around 1800, 1900. And beyond that, as the paint business gains traction, I think there is a possibility that there could be substantial re-rating for Grasim.
Okay, all right. So that's the word coming in on Grasim. We need to take a short break with the news that the markets are absolutely consolidatory at this point in time. A lot happening beneath the surface in terms of specific stocks, such as sugar stocks, a couple of these smaller infra names which are buzzing on the upside. So do watch out for that. We need to take a short break. We'll get to more of your stock queries on the other side. Stay tuned. Welcome back. Well, double-digit gains for a lot of the broader market stocks today. So Kirloskar Oil, for example, is up around 16.6%. We have a lot of the sugar stocks which are buzzing. So Rana Sugars, Mavana Sugars, Dhampur Sugar, just to name a few. A couple of these smaller infrastructure stocks such as Patel Engineering is showing a double-digit gain of around 10-odd%. So a lot happening within that space and underneath the surface, though the markets could just be in consolidatory mode at this point in time. Even something like a Krishna Diagnostics, which is holding with a gain of around 10-odd%. But let's get back. We still have our guest with us, Sharad Avasthi, on the fundamentals. Rajat Bose joining in on the fundamentals to answer all of your stock queries. We have another query now. We have Satish Adiga, who writes to us from Kolkata. He holds 20 shares of Aditya Birla Sun Life AMC, which he bought at the IPO price of 712 rupees per share. He wants to know what to do, hold or sell at current levels. Well, another query, Sharad, coming in on one of the IPOs and buying at the IPO price, and currently the callers or the query indicates that the person is not doing well in terms of the investment. What would you recommend?
See, the AMCs across the board have faced a lot of correction over the last 1.5, 2 years. ABSL AMC is no standalone guy. Even if you look at Nippon or even the largest HDFC, same situation you would see. Even UTI AMC is corrected. So I think from here on, we are expecting that gradually the selling is going to abate. And the long-term fundamentals of the industry remain very much intact. The mutual fund numbers and the type of growth that we expect to see in the mutual fund numbers is still at a very nascent stage, and a lot of growth can be expected in the long term. So gradually, I think as the dust settles, you can expect that this 12 to 15% growth that we are talking about over the next 2 years, these companies should ideally trade at something between 20 to 30 times, depending on the size of the company. So for ABSL AMC for FY25, we are expecting an earnings of somewhere around 30 rupees. So based on that, and even if a 20 time multiple is expected, I think he can hold on to it for a target of somewhere around 600.
All right, got that. I also want to bring Rajat in on this. Rajat, how do you look at this stock? I mean, for this year alone, for 2023 alone, it's seen, around a 20% drop that we're seeing, maybe 18%. So, I mean, he's definitely seeing quite a bit of a loss here. Do you think the chart is likely to reverse anytime soon and he can hope to make this up?
Chart is not showing anything good as such. I mean, it continues to fall, and there is not even a positive divergence or on any of the oscillators, weekly chart, monthly chart, daily chart. Whatever you look at, it is actually showing trendiness. That means further downswing can happen. So if he wants to continue, that is up to him. But actually, one should have exited when it broke 400 mark. After that, I mean, better still, it would have been 420. From there, one should have exited. As of now, only when it crosses 420, then you can expect some kind of a sustainable uptrend, and the real reversal will happen only after 460 is taken out. So this is the technical picture. Personally, I would say that all these stocks were hyped few years back, and from there these AMCs are now seeking more or less kind of valuation that they should command. I mean, those high P's of 25, 30, they are when you actually get them when money is easily available. When money becomes dear, these financials do not perform the way that they performed at one point of time, be it the IPO time or whatever.
Okay. All right, that's on Aditya Birla Sun Life AMC. Let's get to another question then. Meera Ramesh Iyer writes to us from Bangalore. She's invested in 20,000 shares of GMR Airports, which she's bought at 40 rupees, and 10,000 shares of GMR Power, which she's bought at 23 rupees at this point. She wants to know what the future prospects of both of these stocks are at this point. Rajat, technically, how would these two counters look to you?
Well, I would say GMR Infrastructure one should hold with a stop below 36, and regarding GMR Power, it is technically still very weak and one should exit on rallies. And again, I would belabor the same point. These are actually stocks for the institutions like LIC or others who are long-term investors. Why should one retail investor go for these kind of stocks which have long gestation periods and ROC is below 10? I mean, I wouldn't touch it with a birch pole.
Okay, that is on GMR Power and Airports. But the next query coming in is from Natasha Singh, who writes to us from Chandigarh. She holds 200 shares of Delivery, which she bought at 500. Considering the stock price is dropping since June 2022, she wants to know whether to book losses in this one or she should remain invested, keep the faith on Delivery. Sharad, let me come to you first on Delivery. Like we were just talking about, she's also written in, she is seeing quite a loss over here. But do you think if she were to take a slightly longer term perspective, this is still a good investment?
Again, in this case also, next 2 years, earnings are not expected to materialize into positive numbers at the PAT level. So for such businesses, I think it's only makes sense for people who have a high risk appetite to stay on them, because things may not happen the way we are planning. And after waiting for 3-4 years, you might not make. So if you have a risk appetite where you expect that earnings could jump substantially over the next 5 years and you're willing to take that risk, then only it makes sense to stay into these kind of companies. But otherwise, you should be shifting to something else within the logistics space, say something like a Mahindra Logistic or an Aegis Logistic, where probably the numbers would be more supportive of the prices rather than something where the losses will stay on for 2-3 years, and maybe after that 2 years could be good for the company. But even then, if it reports 2-3 rupees kind of earnings over the next 5 years also, the valuations are so expensive that you would find it hard to justify.
Okay, all right, Sharad as well as Rajat, thanks very much for joining in and bringing us all of those queries being answered. For the markets right now, it's a lot about stocks, individual stocks being in focus. For example, IndusInd Bank is your top gain on the Nifty at this point, on the hopes that there could be an extension of the CEO's tenure. So that stock is up around 3.8%. A lot of the Adani stocks have continued to gain. So for example, Adani Enterprises is up around 8.5%. On a month-to-date basis, it's up 49%. But you've got to put that into context because the stock is still down 47% on a year-to-date basis, but nonetheless climbing back definitely from the lows. Similar case for Adani Ports, which is up 2.7% at this point. It's still down 13% year-to-date, but on a month-to-date basis, it's up around 19%. So it's definitely narrowing its losses. Bajaj Auto too gaining on the back of brokerage notes being very positive on the EV space. Well, that's all the time that we have on the show, but do remember to email us your queries and we will address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.